Hello everyone, and welcome back to the QQQ vs QLD Challenge channel. It's Friday evening, May 2nd, 2025, and that means it's time for another exciting monthly update. A lot has happened in the markets over the past month, and much of the recent volatility has been fueled by President Trump's tariffs. These announcements sent shockwaves through the market and triggered significant price action. So, let's break everything down and take a deep dive into what's been happening and what it might mean for our long-term investing challenge. Since our last update, we've witnessed some of the sharpest swings in the Nasdaq in recent memory. QQQ, the ETF that tracks the Nasdaq 100, has experienced both a severe downturn and an equally sharp recovery in a short span of time. In early April, the Nasdaq officially entered bear market territory, having fallen more than 20% from its recent highs. Specifically, QQQ dropped from its all-time peak of $540 on February 19, 2025, to a low of $402 on April 7. That's a staggering 25% decline in just over 6 weeks. Meanwhile, the broader market showed some resilience. Although the S&P 500 flirted with bear market territory in April 2025, it managed to narrowly avoid it. On April 7, 8, the index dipped to intraday lows of around 4,835, a 21% decline from its peak, but managed to close just above the threshold. For context, the last time the market officially entered a bear phase was back in 2022. So, while we didn't get an official bear market across the board this time, the pain felt very real for many investors. As of today, QQQ has recovered somewhat and is currently trading around $488, still about 10% below its February high of $540, but up significantly from the April low. Let's walk through what happened. On April 7, QQQ hit its bottom at $402 following President Trump's aggressive tariff announcements. But just 2 days later, on April 9, Trump announced a 90-day pause on those tariffs, which led to a powerful market rebound. On April 9 alone, QQQ opened at $415 and closed the day at $466, marking one of the most dramatic single-day recoveries in recent history. This brings us to a fascinating article published on April 10 titled, "How the Mother of All Short Squeezes Helped Drive Stocks to Historic Gains Wednesday." According to the report, a massive short squeeze played a pivotal role in driving the market's gains on April 9. Hedge funds had heavily shorted U.S. stocks in anticipation of a steep sell-off due to the harsher-than-expected tariffs. However, when Trump announced the temporary pause, short sellers were forced to scramble and buy back shares to cover their positions. This surge in buying created artificial upward momentum that pushed the S&P 500 to its third biggest gain since World War II. In fact, short positioning was nearly double what we saw back in early 2020. And a basket of the most shorted stocks surged by 12.5%, compared to the S&P 500's 9.5% gain that same day. Trading volume reached a record-breaking 30 billion shares. While long-term investors also contributed to the rally by scooping up beaten-down tech stocks, the short squeeze was clearly the dominant force behind the explosive rally on April 9. Now, let's return to the QQQ chart for a moment. As I've discussed in previous videos, QQQ has fallen below its 200-day simple moving average, the green line, for the first time since the Golden Cross formation back in March 2023. Historically, this SMA 200 line has served as a critical support level during bull markets. Over the past 2 years, we've seen QQQ approach this line during 2 previous corrections, once in October 2023, when it came close but bounced off, and again in August 2024, when it briefly touched the line and again rebounded. However, this time feels different. This time, QQQ has broken decisively below the SMA 200, and that breakdown raises serious questions about what could come next. Based on historical precedent, I believe there are 3 potential scenarios that might unfold from here. Scenario 1, this scenario closely resembles what happened during the market correction of 2018. That correction lasted from October to December and was largely driven by escalating trade tensions as President Trump initiated a tariff war with China. During that period, QQQ dropped 25%, the exact same decline we've seen in 2025, falling from $188 on October 1, 2018, to $142 on December 24, 2018. However, after Christmas, the market started to recover, and by April 2, 2019, QQQ had formed a golden cross. That sequence offers a very plausible roadmap for what could happen now. In 2018, QQQ made two failed attempts to reclaim the SMA 200, first in November and again in December, before a death cross occurred on December 3, 2018. Interestingly, QQQ managed to rise above the 50-day simple moving average, the purple line, about 45 days after the death cross, and then finally broke back above the SMA 200 green line roughly 3 months later. The first attempt to reclaim the green line on February 6, 2019, failed, but QQQ succeeded on its second try toward the end of that month. If 2025 follows this script, we may still need to be patient and brace for some choppiness in the short term. Scenario 2, this one resembles the COVID crash of March 2020. During that crash, QQQ plummeted well below the SMA 200 line, losing 31% in just over a month. But then something incredible happened. By April 7, 2020, just a month later, QQQ had not only recovered but also soared past the SMA 200 green line, kicking off a powerful bull market that lasted the next 9 months. In this scenario, the downturn was short and violent, but the rebound was equally aggressive. Could we be on the cusp of a similar V-shaped recovery now in 2025? It's possible, but that outcome will heavily depend on how investors respond to the evolving tariff situation and upcoming corporate earnings reports. Scenario 3, this is the more painful possibility and is based on what occurred in 2022. QQQ fell below the SMA 200 green line on January 21, 2022, and then failed in 3 separate attempts to reclaim it, on February 2, February 9, and March 29. Each attempt was rejected, and QQQ proceeded to enter a prolonged drawdown, ultimately falling 33% over the next 10 months. It wasn't until January 27, 2023, that QQQ finally broke back above the green line, and it used that line as strong support for the next 2 years, until now. On March 10, 2025, QQQ decisively dropped below the SMA 200 again, breaking the bullish pattern that had been in place since early 2023. The question now is, can QQQ climb back above the SMA 200 green line soon, or are we in for a longer downturn like 2022? Right now, I believe caution is appropriate. All 3 historical patterns, 2018, 2020, and 2022, remain in play. Interestingly, QQQ seems to have rebounded off a historical support level near its 2011 peak, suggesting that prior highs are acting as a floor. But the key technical level to watch remains the SMA 200 green line. On March 26, 2025, QQQ made a failed attempt to break above it. That failure was followed by a plunge into official Nasdaq bear market territory. I believe the next several weeks, or possibly months, will be critical in determining what happens next. If QQQ struggles to break above the SMA 200 and stay there, we could be looking at additional downside. On the other hand, if it successfully reclaims that line, a recovery may be underway. Let's also take a moment to review some recent news headlines that reflect just how dramatic this month has been. According to an article published today, the S&P 500 has managed to erase its losses from Trump's tariff announcement and has now logged its longest winning streak since 2004. Markets surged on Friday following a better-than-expected U.S. jobs report and signs of de-escalation in the trade conflict. The Dow Jones Industrial Average posted gains for the 9th straight session, and the Nasdaq rose in tandem. China has reportedly indicated a willingness to negotiate trade terms, provided the U.S. is open to modifying its tariff plans. These developments have brought a sense of calm to investors after weeks of uncertainty. Another article published today, titled "In Wall Street's Epic Comeback, Unsolved Market Mysteries Abound," explores the unexpected nature of the recent rally. Many analysts remain puzzled by how quickly the market bounced back despite continued risks like inflation, interest rate hikes, and geopolitical tensions. Some attribute the gains to another powerful short squeeze, where bearish investors were forced to cover their positions. Others speculate that undisclosed institutional activity might be behind the rally, with large investors injecting capital into the market to take advantage of lower valuations. Despite the impressive momentum, many experts remain cautious, noting that inflation, Fed policy changes, and corporate earnings could still introduce significant volatility in the months ahead. Now, let's get to what you've all been waiting for, our portfolio update. As of today, QQQ is trading at $488, up significantly from last month's $422. Here's where we stand. We've invested a total of $3,800 into QQQ since the challenge began, and our current unrealized gain stands at about $130, which is roughly a 3% return. Our average cost per share is $472. On April 9th, I added 0.238 shares at a price of $419. I also received a dividend payment of $5.59. Now let's look at QLD. We've invested the same total, $3,800, into QLD. However, our portfolio is currently down about 2%, with a loss of approximately $70. Our average cost per share is $95. On April 9th, after purchasing QQQ, I also bought 1.419 shares of QLD at $70. I received a dividend of 99 cents. Since May 2024, we've been consistently investing at least $100 every month into both QQQ and QLD. This steady, systematic approach is the cornerstone of our strategy. Dollar cost averaging, DCA, helps us reduce the impact of short-term volatility and ensures we're buying both during market dips and rallies. Our strategy remains simple: invest monthly, hold long-term, avoid panic selling, and never use margin. Everything is done with a sustainable, low-risk mindset. If you want more insights into why we're using this approach, check out my 2 videos, Cash vs. SPY vs. QQQ vs. QLD vs. TQQQ, 30-year showdown, and Cash vs. QQQ vs. QLD vs. TQQQ. These videos go deep into the data behind why buy and hold and monthly investing work over time. Remember, this challenge isn't about chasing short-term profits. It's about building lasting wealth over years and decades. Volatility is inevitable, but long-term growth is possible when you stick to the plan. Patience and discipline are the real superpowers in investing. That wraps up our May 2025 update. If you found this video helpful, be sure to like, subscribe, and leave a comment. I love hearing your thoughts and questions. And of course, this video is for entertainment purposes only. I'm not a financial advisor, so always make sure your investment decisions align with your personal goals and risk tolerance. Thanks for watching, and I'll see you next month. Happy investing!